Welcome back to another Triad InfoSec webinar. This is going to be a Veterans Helping Veterans webinar series with Brady Lanham. We're going to talk about mortgages. If you're a veteran and you want to buy a house, you may or may not know that there are some advantages you can take care of or take advantage of so that you can take care of your family and yourself and your future and all the things. I don't know what I'm talking about. I'm here to ask all the dumb questions that hopefully you might have in your head as well, so you don't have to ask them. But in order to do that, I need to introduce Brady. So Brady, can you introduce yourself and tell us a little bit about yourself, please?
How you doing? I'm Brady Lanham. I'm a retired law enforcement officer, and I'm now a mortgage loan originator with Barrett Financial.
So what is a mortgage loan originator?
Basically, the easy way to say it, it's somebody that can do a loan for you when you're trying to purchase a home. You have to get licensed and certified and all that good stuff.
Okay, so I want to buy a home. I go to the mortgage originator, and I mean, my wife does the paperwork around my house. I know that there was a giant packet of papers in there that we had to go through and sign, and I tried my best to not be distracting while she was doing all of that. But what does all that entail?
So it's basically, if you look at it, think about it like a car sales, right? A house is a much larger purchase. So you have title, you have escrow, you have everybody that's making sure the house is ready to sell. And then once all the paperwork is ready to be transferred and you want to buy the house, everything goes through and all the paperwork is signing. So you're signing, everybody gets writer's cramp for the amount of paperwork that you're signing, but you got to think about it. It's not a car, basically. It's a home. So you're going to be signing for a while.
Okay. Bigger purchase, bigger stack of papers. That's what my rock eater brain's telling me.
Exactly.
Okay. So let's back up a little bit. I know this is Veterans Helping Veterans. Typically we have veterans on here. You kind of started veteran-ish, went law enforcement from what I understand. What's your background here with the first responder veteran community?
So obviously with my first responders, I click really well with veterans and I always have. My law enforcement career, I was always teaming up with veterans and first responders. So when I went into lending, it naturally tied in together. I used to train with a lot of veterans in the line of work I was doing. So I got to know a lot of the guys, and basically law enforcement and veterans are alpha type of people. So we typically click. So when I got into lending and got retired in law enforcement, I wanted to give back to the guys that always gave so much. So that's why I prefer law enforcement, first responders, and veterans to give back as much as possible.
Okay. Okay, that makes sense. So how long were you in law enforcement for?
Just under 16 years.
Oh, wow. That's quite a while.
Yeah.
That's quite a while. You can be born and get a driver's license in that amount of time.
Yeah, exactly.
Yeah. Okay. So how does one go from, beating streets, catching bad guys? For those of y'all that don't know, Brady is I don't know if you classify yourself as a competitive shooter, but you definitely can teach that stuff. You know what you're doing. You come out to our range days and help us out with that. How do you go from all those types of skill sets to being a mortgage lender?
So it's a
Seems
long story, but I'll try and shorten it up for you. So I was in law enforcement in Washington State, and when the whole COVID process happened, basically I decided that's not the thing for me. So I ended up getting out of law enforcement at that time, and I moved to Texas from Washington, dragging my family to a state that was a little bit more like-minded to myself. And when I moved here, I was trying to find my purpose and what I wanted to do, whether I wanted to get back into law enforcement here or if I wanted to get into something else. Somebody that I had worked a lot with in law enforcement had got out previously, probably 5 to 10 years, probably 5 in between that. And he had got into lending, and he asked me if that would be something that I would be interested in. And I thought, why not try it? I got into all the licensing and stuff like that. And it was a struggle going from, it's like veterans. I've talked to a lot of veterans, and they have the struggle coming out of being a veteran to coming into the private sector and then trying to find your purpose, right? Where's your value in people, right? So you go from feeling 100% needed to into a career that you're like, okay, I feel lost. Is this my purpose? Is this what I should be doing? Right. For a while, even when I first got into lending, I was like, this is something I'm getting by with, but I feel no drive, no purpose. I'm not helping people. So when I go in front of the man at the end of my life, what did you do for the world? Right. That's the way I always look at things. So I struggled for a while, realistically with that. So that's why I started helping a lot of veterans and first responders to try and give back in that way, to where I feel a purpose, right? If I give back to the people that I know give so much, then it makes me happy, right? It's been odd going into lending though, because not always everything goes perfect. Um, and I always feel like I would rather be hitting a door with my teammates than have somebody else's loan go bad, because when it goes bad, you're playing with somebody else's money, somebody's livelihood, and their home that they want. And you always want to try and make that happen for them, because it's a big goal. So when things go sideways once in a while, when they do, boy, I'd rather be hitting a door. But it's good to be able to make everything happen and go at the end to see the finish line.
That's really interesting. So, I mean, the word that I heard over and over again was purpose. I think that speaks really well to the overall theme of this section of our webinar series with veterans helping veterans. We talk a lot about finding that renewed purpose when you're transitioning, whether that's starting a business or dealing with PTSD or buying a home. When you're talking to veterans and first responders that are looking to buy a home, especially for the first time, how do you see that fitting into their purpose?
That's a huge goal in life, especially when you come back from whatever you're doing, whether you're deployed or just whether you're in, right? You come out and you want to find something for your family or for you for the first time, typically is the ones that I feel like I get the most out of at the end, because you've given them something that a lot of people don't think is possible. I mean, legitimately, when you think about going into a home loan, it scares a lot of people because it's a big purchase and it's a lot of money exchanging, and it's a lot of time and effort that goes into it, to where when they make it happen for them, it's fulfilling to the utmost, I feel like.
Yeah. Yeah. That seems to me, I know for me personally anyway, that sense of being able to provide and protect, not just for veterans, but for any parent or man for that matter that's got a family. Having a home is kind of your rock, right? And that it is a point of stability. To say, here we are, we've got, this is ours. And it gives you something else to drive for, to go out and hunt every day, right? Because I got mortgage to pay. I gotta keep what I just got, type of thing.
Yeah. Yeah, it's exactly what you just said. It's the foundation. It's the start of life in general, basically, is what it feels like. You have that purpose now. I have this. Now I have to go and make sure it's taken care of as the family.
Yeah. Yeah. How many out of all the veterans and first responders that you've dealt with? I know this is going to be a rough estimation. What percentage would you say are first time home buyers?
Ooh, that's a good one. For veterans, the crazy thing, me trying to be a veterans first responders lender, I take a lot of classes on VA loans because they're not that easy to do. I mean, anytime you're dealing with the government, right, it's a little bit difficult to deal with and navigate. So there's a lot of classes you take to stay on top of everything. But first time home buyers, I think it was probably 50-50, I would say. It's a lot of people that are first time home buyers, but when you look at the statistics, and these statistics blew me away. I took a class 2 years ago or a year and a half ago that 9% of veterans used what they qualified for as far as a veteran loan. This year, the statistics are up to 13%. But when you think about it, how many people qualify? And in my opinion, Obviously, I think it's the best loan out there. Well, not obviously, I think it is, but when you look at that statistic of only 13% of the people are using what they've earned, and obviously when you say earned, obviously that means it's a pretty good product because you've earned it, right? Only 13% of people using it, that's a low number. So I like to educate people a lot about that part.
So educate, again, I know we used my VA loan. The only thing I know about that is we didn't have a down payment other than $1. And then my wife took care of the rest of the paperwork because I may look like an adult, but really I'm a giant child.
Most
So
men are.
yeah, what, especially if they're veterans, right? I
Yeah,
see you
yes,
guys
ma'am.
watching. I know who you are. So what all is a VA loan? How is that different from a regular loan?
So veterans are going to get what you call a COE, a certification of eligibility. Does that mean you necessarily qualify? No, not really. But every veteran is going to have the access to a COE, and that you should take that to a lender, and then make sure it's a lender that knows what they're looking at, obviously. But like you said, it's 0% down. That's a huge kicker for people. If you have a disability, because VAs come with a funding fee, but that's what they call a funding fee. Basically, you're paying to use VA's loan. What a VA loan does is it covers 25% of your loan. The government backs it. Okay. So what that gets you away from is your private mortgage insurance. Let's say you have what is a primary mortgage insurance. So that, let's talk about funds for a second. If you have like a $300,000 home, depending on if you do put money down or don't put money down, that could be anywhere from $150 to $300 estimate, right? This is not exact numbers. I'm just giving you the numbers, right? That could be what you're saving a month by not having primary mortgage insurance. Okay. So when you look at that over the span of your loan, that's a large chunk of change that you're saving, right? And the government, like I said, backs you on that. Now, going back to the funding fee, if you have over 10% disability, which with the veterans, that could be having a headache all the time and you get a disability for it. Okay. It's very, very small. Once you get that 10% funding fee, either cuts off and you don't pay it or it's lowered. So that's a huge bonus if you have that. So funding fee is something that it depends on how much the loan is and if you've used your COE before, certification of eligibility. Okay. The other thing is it gives you limits. There are predator lenders out there. Okay. Every career, every job has predators out there, right? So what the VA does is it protects you from that by giving you loan limits of what lenders can and can't do and costs that you can and can't pay for, which is smaller. So it helps the veteran. What I'm finding that realtors sometimes don't like, and I've actually had an example, I've had a realtor push somebody off of their veteran earned VA loan. Okay. I was flabbergasted that happened, that they pushed them off of it. There are some things that the veterans and the appraisal protect the veteran. So the appraisal is like a slightly more stringent to make sure that the house is good for the veteran. So if you have a realtor that is not very knowledgeable in veteran lending, all they think is, oh my gosh, you're never going to get approved on that because the appraisal is not going to go through and it takes forever. Every loan that I've done that's a VA loan compared to conventional or FHA, all the same timing is affected. Do you have a little bit more stringency to the appraisal? Yes, but you as the veteran should appreciate that because that's the government actually having your back. It's not that bad. If you can pass an FHA appraisal, which is pretty close to the same thing as a veteran, so there shouldn't be much different. But in the old days, the VA loan appraisals were stringent and all the others weren't. But now everything's caught up and you should be fine.
Okay. So I've got a couple of things noted down that I want to come back to, but before we get there, we had a question from one of our viewers. It says primary mortgage insurance sounds important. Why wouldn't I want that?
Okay, so you still have homeowners insurance. Okay, that's what primary mortgage insurance covers, the loan. which the government has back, you can drop that on conventional loans. You can drop it after 20% of the loan taken away. So it's 80% of the loan, you can ask to have that taken off because you no longer need it. So homeowners insurance is something that everybody's going to have. Primary mortgage insurance covers the loan.
Okay, so if you're getting a, just to make sure I understand this, or part of it,
Yeah.
let's be realistic. Um, I don't necessarily need to pay for insurance on my loan if I'm using a VA loan because it's backed by the government. Whereas if it's a conventional loan, I may need to I may want to consider getting insurance on that because it's not backed by anything except for, I don't know, me.
Kind of, but so basically the loan is covered by the investor, right? Up to
Okay.
once you hit 80%, you don't, the investor doesn't need it and you don't need it. You can take it off. So basically it's covering the initial 20%. So by the government backing the 25%, that's why you don't need it.
Okay. Okay. So you're saving on a couple of different things here with a VA loan, right? You're
Yes.
not having the down payment. You're having them watch your back for an appraisal to make sure that the value of the home is accurate to what the price that you're agreeing to. And then it's saving you because you don't need this extra insurance on the mortgage
Right.
itself.
So when you look at rates, everybody cares about rates, right? The VA rates are typically a little bit lower. When I say a little bit, I would just estimate, this is not a hard number, estimate it's about 0.5%. So say right now, VA loans could be around 6.5 and conventional loan could be around 7.25 to 7. So you're saving in the long term on rates as well. That's why it's beneficial.
Okay. So there's quite a bit of incentive to use a VA loan.
Yes.
And are all those advantages across the board, or do you have to have that 10% disability for some of those advantages?
The 10% disability is for the funding fee, whether you pay that or don't pay it. Okay. So everybody gets everything is the same. It's just whether or not you're paying for the funding fee.
And then for that 10%, I know in the veteran community, I help out with a lot of different veteran nonprofits for a lot of different reasons, but I find that a lot of vets will not go to get rated for their disability for a couple of different reasons. Either they say, I don't want people to look at me like I'm different. I don't feel like I earned it, or somebody else needs it more than me. So that leads me into my next question is that when you're talking to a veteran that hasn't been rated with a certain disability, they say they don't want to go. Do you have resources available that you can send them to? Like it's a third party to help them with the rating and talk to them about what that process is like and what they could potentially be rated for before they do a mortgage?
That's a good question. I do not have that, but that is a very good question. I've never been asked that before. That is a resource that now that you've said it, I'm going to look into it. I do know that when you're talking about veteran stuff, I always hear how tedious everything is to try and get into and get help with. So I hear that a lot. So that's something I'll look into for sure.
Bear over at the PTSD Foundation, right?
Right. Yeah.
He's got resources for you.
Okay, perfect.
They have a couple of different resources they use for their guys that go through the Camp Hope program. So that way you'd be able to have a couple of things in your pocket for guys like that and go, hey, why don't you do this process and let's pick this up in 3 months once you get your rating, and that way we can, get you some more advantages here if that's what's necessary or desired.
Yeah,
and then
I was talking to Bear last time we were at the range, and he was talking to me about credit. A lot of the guys that he deals with just hammer their credit. So one of the good things is I have a lot of resources for people to build up their credit. Obviously, that's something we want to work with, and I'll tell them the options that they have now, and then I'll tell them, hey, let's work on this. Could be a long-term, let's buy a house in a year, but let's get you fixed up, right? Another benefit for VA loans is the credit score. So typically on conventional, is 620 is the average of what your credit score should be. And with veterans, it's 580. Same goes for FHA. It's 580, but you can go a little bit lower than that too. We can go down to get a non-QM, which is non-qualified mortgage, to get the veterans more, but 580 is the score that you want to start with to help benefit them the most. Now, if you have a 580 or a 700 credit score, veterans get the same rate. It doesn't change. Now, in conventional or FHA, if you have 620 versus 700, the rate will change what you qualify for.
What? Probably should have done some research before starting this webinar, but what's an FHA loan?
There's three types of loan, right? You have conventional and you have FHA. A Federal Housing Association, I think is what that stands for. So it helps people with lower credit scores. Okay. So you have conventional, VA, and FHA. Those are the main ones. There's different types of loans for just bank statement loans. There's a lot of different style loans, but those are the three main for residential.
Okay, that makes sense. So wow, all right. So let me see if I get this right here. A VA loan means that you have almost an easier qualification than an FHA loan with more benefits than a conventional loan.
You could say that.
Like your credit score can be what it is at an FHA, but you don't need the insurance. You get a little bit better rate, right? That's really interesting.
Typically with FHA, you still need to have primary mortgage insurance for the life of the loan, compared to compared to conventional. At 80%, you can ask to have it taken off. So that's why you see a lot of investors always putting 20% down so they don't have to pay the primary mortgage insurance. So it saves them a large amount of money.
Okay. Now, are the loans the same for residential loans as commercial? Like if I was going to buy a rental property, for example, or if a veteran was going, hey, we've gotten our house and our homestead, we're trying to invest and pick up some rental properties. Do they do the same type of loan process, or is that a different type of loan process? How does all that work?
So typically what I've seen up to 2, sometimes 3. I've heard of 3. I haven't done 3. So you have the COE, what your entitlement is, okay? That gives you a certain amount of money that is backed by the government. The key to that is they will fund you your primary residence, okay? So what that means is if you want to be an investor, what I've seen is they'll lose their first home, starter home, and then they'll buy a new primary home and turn their first home into a rental. I've also seen a veteran buy a 4-plex, live in one, and use the other for rental income, along with him having another property.
Okay. So what is the homestead law there? You got to live there for what, like 3 years or something? Is there a limit? That like if I'm going to buy this and live there, I'm assuming, it's a big assumption, but I'm assuming I can't just move in for a day and then move out and rent the place.
Right. You have to live there. I don't know how long the Homestead Act is for, because like I said, I'm new to Texas, and that homestead thing blew me away when I moved here. So I had to fight all of that stuff. So I'm still new to that. I don't know what it is typically, but typically where I'm from, you have to be there 2 years. But if you buy a home, and I've seen this happen, you buy a home and be like, I just don't like this. I'm going to buy a new primary, and then they keep that. I've seen that happen. Just depends, because I mean, what if you don't like it? You have the chance to move.
Yeah. There's something wrong, or your neighbors.
Everything has guidelines and boxes that you have to fit in. So I'm trying to talk very generic, because a lot of lenders, and there's different types of lenders. There's a banker, there's a retail, and then there's wholesale. So bankers have a small box that either you fit all of your credit score, what they require, into this box, then they can do your loan. Typically, I want to say that the debt to income ratio on them is a little bit higher because they're holding the loan. Retail and wholesale will have a little bit bigger of a box that they can play in. Wholesale I have over 100 different lenders. That's what makes it hard for me, because I'm trying to talk generally, because every investor that I have has a different bubble that I got to fit into. So the more knowledgeable you are in all of your investors or your primary investors. I have primary investors that I use for veterans because they're owned by veterans. They care about veterans. So sometimes getting a certification of eligibility is not easy, especially veterans trying to figure out, okay, where do I go for that? I have a product where I just use that investor. They'll get it for you. If you sell your home, then you want to get your COE replenished so you can buy another new home. They will have it replenished for you. So there's a lot of investors that you need to know and utilize, like realtors. Is your realtor a veteran? You know, why would you not want to use a veteran helping a veteran with a veteran lender or preferred lender? Because as you can tell, there's a lot of information for veterans that you need to know and how to navigate all of their systems.
Yeah. So, yeah, veterans us type of thing.
Yeah.
I find that's pretty common. If folks are plugged in, right? There's a pre-established trust there between veterans and the first responder community that says, as long as you don't jack this up, I trust you.
Yeah.
Right.
It's just like the same thing.
Maybe not as
jujitsu. It's the same thing.
Yeah.
Like you just trust another person because you're about to throw them into a mayhem, and they trust that you're not going to hurt each other.
Yeah, unless of the white belt that's only done no-gi for 10 years and they just walked in the gym. Those guys are gonna wrestle you and they're gonna pop your knee. Be careful.
Yeah.
Been there.
But that's your professor's job to watch them.
Yeah, that's very true. Very true. Okay, so talking about veteran realtors takes me to the next question from one of our attendees. And maybe not so much of a question, but maybe you've heard of a story like this too. It says, I got talked out of selling to a vet because my realtor told me the VA loan takes too long. Now I feel bad. Have you ever heard of situations like that where somebody's selling a property and there's a realtor that's like, no, don't deal with that VA loan?
Yeah, that's the part that I was talking about, on education for veterans. That's why you have 13% of veterans utilizing their loan, right? It's sadly, it's very common. That's why classes like this for veterans is really good, because you can tell them, hey, it's really not that difficult as long as you vet the lender they're using. If you don't know what you're doing, it can take a while. But if you know what you're doing and are a preferred veteran lender or first responder lender, it's not a difficult process. I close in the same amount of time that any other loan would, because I've navigated the system before. But a lot, like I said, this is the same example of one of my clients being talked out of using their VA loan. So, but if you get a veteran realtor, doesn't mean that they're educated in VA loans either. But you just want to vet the person, right? Is it somebody that knows what they're doing? How many VA loans have you done? Ask questions, because a lot of people think they need to use this lender or they need to use this realtor, which you don't. You can have, I tell people all the time, get 3 realtors, and who passes your questions, who knows about veterans, who talks like a veteran. Everybody talks with a certain way. So you can tell if they've been around somebody or knowledgeable about something or not.
Okay. So are you guys like, can you service a loan nationwide?
So for me, each lender has different states that they can get, right? I have 3 right now. I'm working on a 4th. Some lenders can't do other states. It's just specifically Texas. But my goal is to, and my team has, I want to say 25 years total in lending. So basically to make sure I cover the veterans. I'm somewhat new because I'm fresh out of law enforcement. So I've only been doing this a little over, I think right at 3 years or just under 3 years, maybe 2.5. Okay. So for me to cover myself, I've specialized in taking a lot of classes in veteran stuff. My partner does a lot of different style loans, so we cover each other. So when I'm implementing a loan, he goes over and looks at my loans. When he implements loans, I do the same thing, so we cover each other. If we go into a construction loan, one of our partners just does construction loans, so they look over those products. So they make sure that we don't miss anything for our veterans or construction loans or our people, period. So there's a lot to a loan, so that it's nice to get second pair of eyes on it. So I want to get licensed in a lot of states where if you're selling here, I can follow you and get you pre-qualified for wherever you're moving to or getting transferred to.
Okay. And you said you can write loans in 4 states right now. What are those 4 states?
So I'm in Washington, Arizona, Oregon, and Florida. Florida, I think.
Washington, Arizona, Oregon, and Florida. And Texas?
And Texas,
Or
sorry.
5?
Yeah, 4.
That's
Might be
okay.
Oregon.
Oh, well, I know what you meant. You meant 4
Yeah.
states and the great nation of Texas.
Yes, that's
Yeah.
right.
That's okay. All right.
Yeah.
We're on the same page.
I forget I live
Okay.
here, so yes, I have to be here.
Yeah.
And a lot of
Okay. So what
realtors too
I'm
don't, a lot of realtors don't understand that I can do, say I'm in South Texas right now, I can do loans in Houston, and a lot of realtors don't know that because not every lender can do that.
okay. Okay. That's helpful. So what led me to ask that question is you've said a couple of times, make sure you have somebody who knows what they're talking about. And I agree with you. But as somebody who doesn't know what he's talking about, I have no idea how to make sure somebody else knows what they're talking about instead of them just blowing hot air. Right. So if folks that are watching this or watch this in the future on our YouTube channel go, man, this is helpful. I've got a guy, I have no idea. Do you have sister companies? And then follow up to that, even if you don't, are you willing to take a call and just go, hey, yes, no, maybe so, with what I'm hearing from the interaction you've had, and just generally be helpful within the community, try and raise this number from 13% to say 13.5?
Yes, 100%. So I'll take calls from anybody. I take consultations from anybody, even if it ends up to where they don't want to use me. That's completely fine. The goal is to help people get what works for them, right? And I'm not everybody's cup of tea. I get that, right? So I don't mess with everybody. If I don't mess with you, at least let me help you through the process. So there's a bunch of questions that you can look up online, and it's pretty easy. What questions should I ask of a realtor if I want to use my VA loan? Anything like that. They'll give you a lot of questions where you can ask, right? If your realtor doesn't know how to answer the questions, obviously it's a given, right? But you can do consultations and then of each person when you're interviewing them and say, hey, look, can you explain me this process? Have you dealt with a VA loan before? I haven't. Even if you have, or if you know a lot about it, say, hey, can you walk me through it and tell me the whole process? And if you've educated yourself and watched stuff like this, then you'll see things that they're missing or the worries that they have, right? If you have an educated realtor, you can go and look at a home and they can tell you, hey, honestly, I don't think this house will pass a VA inspection. If that's the case, can you tell me why? And then do you want to pay for that and get it fixed prior to? Because they do have that, right? You can fix the home before. There's a loan for that. But those are questions you want to be able to ask. You want to have a realtor that's going to be able to tell you, hey, this is why I think that it might not pass, not just this is never going to work. And VAs take too long.
Yeah. That makes a lot of sense. Do your own push-ups, right? Like
Yeah.
there's plenty of resources out there, and just a little bit of knowledge will tell you whether or not somebody's making stuff up as that's coming out of their mouth or not.
Exactly. And it's like going to be the largest purchase you've ever purchased. So doing a little bit of research shouldn't be that big of a deal. Or calling the right people.
Yeah. Well, that's research too, right? Like that's how most of the knowledge that I have is not in my head. It's in the people I know's head, right? That's why we do webinars like this.
Well, and honestly, 100%,
okay.
I don't know everything, and I have to look up guidelines in a lot of stuff. So I try to answer questions, and honestly, if I don't know it, I'll say, hey, I don't know, and I'm going to get it back to you, but I'll get it for you.
Yeah. 100%. Okay, so let's talk about folks that maybe got into a deal it's pretty bad, but they're already in the home.
Mhm.
What do they do? Is there any recourse?
It depends on what you're talking about. That's a big question. So if you're
Well,
talking
break it
about,
down for me. Yeah, I don't know. I
yeah,
don't
so
know
if you're
what I'm
talking
talking
about
about.
their rate is high, or say they didn't decided, okay, they got talked out of using their VA loan, right? You can refinance. Anybody can always refinance as long as you've been in 6 months of the loan. Okay, so when I say 6 months of the loan, 6 payments of the loan. So the sometimes it's typically 7 months because your first payment's not a month typically. So 6 payments into a loan, then you can refinance. If you want to do that from conventional or FHA into a VA, you can do that. It just depends on that. Like I said, that's a big question. It depends on why they didn't get treated fairly.
So what are some legitimate reasons that you've seen that qualify as unfair treatment, right? I realize it's a case by case basis, but generally speaking, if somebody's watching this and they're going, well, that sounds like me. These walls were painted purple and I didn't like it after 6 months and I thought I would. That's to me, that doesn't sound like a good reason. What would be a good reason?
A good reason I would say would be somebody saying, hey, do this FHA loan. Say you have a 590 credit score, right? And they say, hey, we're going to get you in this loan really easy, FHA, and here's your credit score. That's why. Here's your rate. We'll get you in the house. And you're a veteran. I would refinance as soon as possible to get out of the primary mortgage insurance, which is going to save you a large amount of money a month. Plus, it puts you into the loan. So the refinance, sometimes you can, it depends on how much you owe on the home. But typically the closing costs are around 3%, but on a refinance, as long as you have the equity, you can put everything into the loan too. So if you have a good lender, they should tell you how long it's going to take you to get out of the refinance. What that means is to recoup what it costs you to do the refinance will take you a year and a half to pay for itself. Are you going to be in the house for a long time or short term? They should say, yes, that's a good loan. No, that's not a good loan. But what I'm seeing, a lot of people are just saying, hey, refi, let's do it.
Okay.
So,
So
and if they're not doing a consultation, 100%, if you're talking to a realtor and they don't want to meet you, or if you're talking to a lender for sure and they don't do a consultation of what your goals are, where you want to go to, hey, this is my first starter house. I want to get into a bigger primary and I want to try and keep this as a rental. If they're not doing consultations like that, that's not the person you want to deal with.
yeah. Yeah, teach me to fish, right?
Yeah, because I don't want one loan of yours. I want your lifetime. And I'm 100% referral based. So if I don't do you a good job, my referral just went out the door and I'm never going to see you again. I typically
Yeah.
try to be friends with my people and I keep communication with them and we're doing stuff down the road or I'll be in front of you the whole time because when you buy a home again, I want you to come back to me because I treated you right.
Right. Right. I'm right there with you. The relationship is more powerful than the transaction.
Oh
Right.
yeah. And treating people right.
Yeah. 100%. I was just talking with somebody about that this morning. He does leadership consulting on core values, and he was talking about it's a book series. Let's see. Anyway, and basically it was when you're talking to a person, you have to view them as a person first, to treat them like a person. If you're looking at somebody like your next dinner meal, you're going to treat them like they're your next dinner meal. And I think that's a great way as a buyer in any circumstance to look at the person sitting across from the table. Are they looking at me like they're hungry and they're about to take what I got? Or are they actually concerned about where I'm going and what this means to me?
And how many options did they give you? Because this is your goal, this is where you want to go. And then look at, you can have this option, you can have that option. Which one do you choose? If they're choosing for you on a purchase, say 6 months down the road, your goals change. I would much rather say, hey, I give you a couple options, see what you want to do, tell you the pros and cons of those. Once you make that decision, then if you change your mind down the road, okay, I can try and make that happen for you too. But that's just because your goals changed. If I pick that for you, you're going to be mad at me because I told you this is what I wanted to do, right? I always we've talked about. I try to talk in layman's terms, right? I can go all goofy and talk percentages and numbers, right? But then everybody looks at me like, what did you just say? Right? My wife's an RN in the ICU. She comes home and talks to me about her analogies and acronyms. And I'm like, I have no clue as to what you just said, right? So if I come in and talk to you about percentages, debt to income, the COE, right? You're going to be like, what? So education through the process and knowing what the process is going to be to where you're not surprised at anything, especially when it comes to funds coming out of your bank account, is a key to success.
So when you're doing a refi, do you have to work with the same lender that you did the original financing with, or can you go somewhere else?
No, you can go anywhere you want to.
Okay.
Just like if you're going through a loan right now and say, hey, the loan estimate came out and I signed it, right? Typically you get a loan estimate that's the highest for me. I try and make it the highest amount of funds that's going to come from you, the client. Okay. And I always tell them that, hey, this number is going to be higher than we talked about, but it's going to slowly come down as we get all the final numbers, right? It's not going to go up. I try and make everything not go up, right? Because you got the loan estimate. If it goes up, I'm typically paying for it. I don't want to pay for stuff. So I try and make it high, right? By the time you get the closing disclosure at the end and you sign that, that's where your final numbers are. So always try and push for high at the beginning, low at the end, and then disclose everything. So I go through line by line. Hey, this is an origination fee. That's where my fee for my company comes out. Do you have any questions? This is what the title fees are. This is what it costs them to go through and do all the paperwork for your title. So I go through line by line of everything and make sure they don't have any questions, especially on the loan estimate. And then I'll give them that. Until you get an actual address and a contract, you put in the system TBD, to be determined on the address, right? For us, loan estimates have to go out to a person to where you can shop me, okay? People are getting away with not doing the loan estimate because you don't have the address yet, okay? And if you tell me, lender, hey, can I get a loan estimate? I know what that means. That means you're going to shop me because that's what you should be doing, right? What I typically say, I appreciate 100% you're going to shop me. I'm going to give you the loan estimate. Just know rates change like 4 to 5 times a day. So once you get all these people's loan estimates, come back to me and I'll see what I can do on all of it because everything's changed. You got to try and trade apples for apples, not apples with something else. So people should be shopping. And then even after you've signed the loan estimate, do you have to stick with that person? No. If they've upset you, until you sign at the end, you can change. Do you want to do that? Because you have a timeline too when you're supposed to close, but it doesn't mean you have to stick with that. You can go to somebody else if you need to.
Okay. So until all 100 signatures are on the dotted line.
That's a pretty small number. It's probably higher than that.
Yeah, okay. All right, so I have another question here for you from Walter. He says, my other company is PCF Home, building in Florida. Can you work with new construction?
Yes. So hard part is for veterans too, especially with new builds, right? I have a one-time close product. I do. For veterans, it's still 0% down. Okay. If you're doing stick homes you're going to do a ton of the same home, it's pretty easy because you don't have to worry about plans and all that. But for a builder, sometimes they might want to deposit basically, and you have to put 5% down, which is the startup fee for them. But for veterans, you can still do 0% down. It's going to go into that if they do require that. But a one-time close versus a two-time close is a huge difference. I can explain that if you want. But yes, I do a lot of construction for veterans and conventional.
Okay, perfect. So Walter, do me a favor and put your contact info in the chat or in a question here, and I'll get that over to Brady so y'all can connect. And then Brady, how does Walter get a hold of you?
Okay, I can put all my info in there as well. I can give it to you and you can put it in.
Okay, so when we post it, we'll put it in the comments, and we'll have it in our newsletter as well. Yeah. Okay. All right, too easy. Okay, so you said something I didn't know about with a 1-step, 2-step, 3-step loan. Sounds like we're line dancing here in the right state. What are you talking about? Well, that 1-step seems enough with more than 100 signatures. What's a 2-step?
Are you talking about one-time close or two-time close?
Yeah, what is that?
Okay, so In construction, sometimes basically what happens is some lenders will have a 2-time close. So you start the loan and get it locked in, and then the construction goes through, and at the end of the loan, you get another secondary close. So you start with the interest rate, you do a contract, you go through the whole building process, and then at the end, you do a second time close, and that's done. When you look at numbers, which I do, typically estimated, a good rule of thumb is typically a little bit high, but a good rule of thumb, the closing cost is like 3% of whatever you're spending. Okay. So that's not a small chunk. Think about a, say, $600,000 home. You're looking at around 18,000 in closing costs. Times that by 2. Okay. One-time close is you close right up front. You get one closing, and then what my product is, it goes all the way through the construction, and then at the end, say rates have gone down, it floats down to where it's at. It doesn't stay there, stay at whatever it is. Say, okay, I'm not going to get political, but some people like, when's the right time to buy, right? Right now, rates are high. And everybody believes, hold on, not everybody, a lot of people believe that Trump's going to make the rates come down. So should I wait or should I buy now? Okay. When you're talking about 2-time close, it doesn't matter because the rates are changing, right? But you're paying for 2-time close. For me, a 1-time close, yes, your rate's going to be high, especially right up front because it's a high cost loan, right? It's a little bit of a worrisome for lenders to do a construction loan. Okay. So it's a little bit higher interest rate. Once the loan is done, it floats down into VA rates at the time, or conventional loans at the time. Whatever the rates come down to, it changes down to it. A lot of people on the 1-time close, what you start with, it stays at. So you have to ask those questions and know, hey, is this a 1-time close, 2-time close? What's your product? Because literally every lender has different products. For me, if a veteran comes to me and says, hey, I want to buy some land, I'm going to say, and I'm weird. My wife tells me I'm definitely weird, right? I'm going to tell the veteran, okay, I really appreciate that. My product for you is not right. It's going to cost you too much money. You need to go to a credit union, and I can set you up with somebody if you don't have it. But typically, they're better on land loans. Same with HELOC, home equity line of credit. I charge you for closing. Credit union banks don't typically charge for them. So me being honest, I'll just say, hey, I'm going to charge you, and I can make that happen if you want to. I suggest you go to a credit union because they don't charge you. This is what I'm going to have to charge you. If you want me to, I can. I prefer you to go there because I'm going to cost you too much money.
Yeah.
So that's not typical, but that's how come I get return business.
Right. No, trust and transparency, right? Right.
Yeah.
Tell you the truth, even if it's not beneficial in the short term, then we're good to go.
Yeah, I did that twice in the past 6 months.
Yeah, I'm with you all the time. We get that with cyber every once in a while too, where it's like, you don't need the whole army, bro. You need a Sherpa to help you up the mountain, and some food, water, and a fire starting kit. Let's just start there.
Right.
Okay, I got Walter's info for you, so I'll get that over to you. And I got another question here. Let's get emotional. How do you assist someone who's had a horrible past experience with a realtor not relaying important information? So, how do we unjade the jaded there, Brady?
Well, that's a difficult one, right? Because I'm not a realtor. That's a good realtor question. But transparency is key. Interviewing people is key. But you're always going to have that, oh man, I thought they were good. I thought they were going to treat me right. And then at the end, they don't. Typically, most lenders have a group of realtor groups that they deal with and have had really good experience with that will, I typically try to go with ones that have a big heart, right? If they're like, no matter what, I'm not changing how much I make, I'm valuable. Everybody's valuable. I get that. But everybody has a sob story. And I'm that guy that always falls for the sob story and loves it, right? So a bad experience would be trying to go for transparency. Interview. That's the only thing you can do. If you don't know a realtor, then talk to your lender and say, hey, can you give me like 3 so I can interview that you trust? Because typically what I do affects the realtor. What the realtor does affects me. So if I'm not working with people I trust, I don't want to work with them.
Yeah, I'm with you there. I'd say if you've had a bad experience before, first things first, you're gonna have a bad experience again. It's just part of life.
Yeah.
But it's your ability to do something about it and not lose your trust in people as a whole that's gonna allow you to find somebody that you do trust. And for those of you that don't know, or maybe just don't play in this space, all of the big heavy hitters in the world, the guys that run private equity firms, venture capital firms, banks, political offices, everything they do is referral based. Every single thing comes from somebody that they trust, handing them the name of somebody else they trust.
Mm-hmm.
That's the only way that you can cut through the facade. It's not hard to put up a solid looking brand and even get a decent sales pitch, right? The gift of gab, silver tongue, it's a real thing.
Right.
But ask, right? Find somebody that had a good experience and ask.
Well, the one thing too is that my question would be if the realtor did something wrong, did that realtor tell you to use that lender? Because there's what they call preferred lenders, right? Hey, if you use my preferred lender, you'll get this discount. Or especially for construction companies, hey, use these 3 lenders and we'll give you $5,000 off. So for that person that had a bad experience, was that lender tied to that person? And if so, you should look at your closing disclosure to make sure you weren't done wrong and not know it.
Yeah, I'm with you there. Okay, so what haven't I asked that people should know?
You hit me pretty hard. You put me hit pretty hard. I guess the one thing I would say is if you're looking for veteran loans, right? Try hard to ask pertinent questions. And if you don't know, educate yourself. Call lenders, ask questions, right? Everybody's Googling everything these days. Throw it into Google. Hey, what are good questions to ask this person? And then get what's the right answers for those. You can Google pros and cons of everything. ChatGPT is the same thing. It's a very smart system. Some people like it, some people don't, right? But try to educate yourself. And if you're working with a realtor that doesn't educate you through the process and you don't click with, because like I said, I don't click with everybody. I try to be honest and I want return business, right? But if you come to me and be like treating me like a car salesman, right? That's an image. Not all car salesmen are bad, but that's a good image. And you're sleazy type of person, then obviously you're not going to get return business, right? If you're that type of lender or that type of person that's like thinks I'm that way, one, I got to learn your trust, and that's what I'm going to want to do, right? If you don't trust me off the bat, we're going to do the biggest deal you've ever done, and you're going to hate the experience, right? If you trust me, then I can walk you through the whole process. But if we just don't click, it might not happen. But I know about other lenders that you might click with, and I can even guide you to them to make sure that you get treated right. So ask questions, educate yourself is always key.
Okay. That seems like a good rule just in life, right?
Right.
Man, I deal with that on a daily basis, trying to be a little bit more humble and not just word vomit all the time and ask some more questions. But just generally speaking, it keeps me safer. Helps build relationships a lot faster. And to be totally honest, leads to more sales.
Yeah.
Like,
If you're a person, if you're an actual person, if I spewed debt to income ratios, right? For a veteran, your debt to income ratio can be 56.99 for me. Okay. That's pretty high. For conventional, for me, it's 49.9. Huge difference, right? FHA is 56.992. So I don't know if I talked about that earlier or not, but that's why you might get pushed to an FHA because I got out and I bought the world, I bought a new truck, I bought this, I bought that, and your debt to income ratio goes high, right? Everybody's like, ooh, look at this, I'm making 800, now I'm making 2,000, I'm gonna buy a $1,500 payment. right?
Veterans would never do that. They would never
I know
get
that
out
would
and
never
just spend
happen,
all
right?
that. No.
So, so that's why the hires, everything about the VA loan is best. I think, I'm 100% biased. I get it, but I think it's the best loan out there. There are good loans out there. Don't get me wrong. And there's loans that you might not, maybe you might not want to. I won't really want this house, but it has a lot of problems with it. You're not going to pass the appraisal, right? You really want the house anyways. You might go with something else, but educating yourself, knowing what your debt to income is, and if you need help, being okay with talking to somebody, be like, hey, look, this is my credit score. I'm not going to be a fast one, but I really want to buy a home. And you need to have that lender that's going to be like, hey, let's make it happen. You want to talk to this person's a credit repair person, or, let me see what all your funds look like, and then we'll set a plan to get stuff paid off. That tax income comes back. Don't just blow it on a good time. Let's fix stuff.
Yeah, I'm with you there. All right, we got 4 minutes left. Can you tell me a story about a veteran that you were able to help?
So one I really remember is he had, I want to say 540 credit. I helped him bring it up. We worked probably 6 months together to do it, and then was able to get him a home, right? You're never going to be, especially on your first home, I'm finding a lot of people want, I want a 4-bedroom, 3-bedroom house, 2 bathrooms. It's a single person. I want this mansion. They don't think about building up to what you want, so if you can get a person into something reasonable and be like, hey, this isn't your forever home, this is your now home, and then I can get you into a second primary, and you can turn this into a rental, because he wanted to become somebody that has a rental property. So once we got him into his first home, and then was able to get him into the second home and move up to what he wanted to, the 3-bedroom, 2-bathroom home that he wanted to, and can, find the girlfriend or the wife, whatever they wanted, was, it just makes you feel good, because it's not, like I said, for me, it's not a short term, it's a lifelong project, right? How many homes are you going to buy in your life? How many investments you're going to get into? I want to be there for that and guide you through your whole portfolio, right? And then when you get them to do, I started out, I got out and my credit was 540 because I may have bought a $1,500 payment truck, right? Which may have been the case. So once you get into fixing everything and then getting a person into a first home, they're happy, get that one for a little bit, and then moved into a secondary, the new primary, that was very fulfilling, right? And you actually feel like you're giving back to somebody that is growing, right? You grow together in life.
Pretty neat. That's pretty neat. All right, brother. Well, tell everybody that's watching how they get a hold of you. What do they email you? Do they call you? Do they send smoke signals? How do we get a hold of you?
Yeah, you can email me. It's Brady L, so BRADY L at Barrett Financial, BARRETT financial.com. Okay. Or you can call me on my business line, which is 956-888-5582, or my cell, which is typically the best way to get a hold of me because I'm always moving, which is 509-307-8950. And you can text me too, because if I'm in meetings, then I respond to everybody in text. But if I'm not in a meeting, I'll answer my phone.
Awesome. We'll stick around for a minute while we let this recording upload for everybody, but thanks for joining us for another episode of Veterans Helping Veterans. This has been the Triad InfoSec podcast with Brady. Say your last name again.
Lanham.
Lanham. Okay. Not Lanham, as I said when they opened. Lanham. Brady Lanham. Yeah, I've been Josh, your host with the most questions and knows the least. Thank you guys again. We'll see you next time.